Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. We've got a short week ahead of us, and let's face it, folks are going to start phoning it in probably as early as Wednesday. And that means that as we go into that Thursday, Friday, bank holiday affected session, the 2 sessions this week, as we go into the Thanksgiving holiday here in the US, the thing to remember is Wednesday, folks, probably after lunch, are going to think, all right, week's done. Thursday, obviously, the market is closed, and Friday is a half day. So just presume that the week is going to behave like it's a 4-day holiday, not a 3-day holiday, and that's the reality of the attention that we're going to be dealing with. Now, the other thing we want to do is take a look at the economic calendar, because is there any reason for traders to stick around Wednesday afternoon or even Friday? So take a look. By the time we get to 10:30, 12 noon on Wednesday, we'll have the crude oil inventories and natural gas storage. So natural gas, those natural gas traders out there who play the storage release, remember, it's on a Thursday release. They didn't push it out to Friday. They pushed it up to Wednesday. All right. So Thursday. What about Friday? We've got nothing. Believe me, it's going to be very much a phoned in Friday, half day, very low volume, very low participation, activity, attention. And that means that, sure, we can move up and we can move down, but it's going to do so in very low volume, which means liquidity is part of the way in which we get filled quickly in or out of a trade. It's oftentimes whether or not we can move through levels very quickly, because there's just not going to be much size at play. So treat this as really nearly a two and a half day, maybe generously a 3-day week. And as we get through Black Friday and we really get into the most intense part of window dressing season, look, gang, if you've been following any of the content here in Charts and Coffee, or if you follow me in the Sector Secrets room, we are absolutely bullish. And again, not broadly so, not indiscriminately so, but rather what are the strong sectors and what are the strong stocks so far this quarter, and what has the probability of benefiting from strength getting stronger? What are the things that have surged in the last quarter of the year that someone who is letting someone else manage their money would want to see? Hey, I really heard whatever it is surged recently, and recency bias is a thing, and it's definitely an influencing factor on window dressing. So they're going to want to see that they own those things. Equally, maybe more so, they're not going to want to see the stuff that's underperforming in their portfolio. So not only does weakness get stronger, strength gets stronger, weakness gets weaker. So things that have been performing well to the upside quarter to date are going to continue to benefit from strength. Things that have been underperforming quarter to date are going to continue to be sold. And oftentimes we like to use the terminology as tax law. I say we as in, traders and investors. You'll hear terminology out there like tax loss harvesting and window dressing and Santa rallies, but it's just this phenomenon of end of year Q4. I call it the report card, and that's what we've got going on. So this is what the quarter to date looks like for Q4. What's at the top of the list? What's at the bottom of the list? Look, airlines are on fire. I mean, they're up 16%, almost 17% this quarter alone. Regional banks, almost 20% up this quarter alone. These are some big, big numbers. I think it's also important to see when you look at this list of everything from airlines to healthcare to semiconductors to real estate staples, insurance, metals and mining, consumer discretionary, consumer staples. It's a pretty broad list. Disparate, right? These aren't connected lists. It's their own, all these little niches, all these little sectors. Most of it is either flat, like semiconductors, -0.3, nothing really, or it's mostly up. So look, really, what 2/3 of this list is in the positive, is in the black, and that's That's what participation should look like. This is not risk aversion. This is not staples and real estate and utilities at the top of the list in an effort to sort of play a defensive and hide out, right? This is actually risk appetite. And risk appetite looks like, what are those names that can bring us the best returns? It doesn't have to be tech. Obviously tech is not dominating this. Financials and a number of oil services, oil stocks, oil and gas explorers. That's what's up at the top of the list. But you really can't hate on this market in terms of the strength and as broad-based as it truly is in terms of the different sectors. I mean, insurance is up there 7.5%, right alongside communications, right? That's your Google, Meta, Disney, Netflix. That's your telecommunications like T-Mobile, TMUS. So again, really good overall health going into the end of the year. Got a gap up. So Sundays, after Friday's close, if there is going to be any kind of gap, we're typically going to see that on Monday morning. Yes, we'll see gaps almost all the time on QQQ, but that's not because there really was a gap. Let's differentiate between what I think real gaps are and what gaps are based on the fact that you have these very truncated hours for stocks and ETFs to trade, and therefore by the very nature of that trade basically stopping at 4 p.m., and then the Asian session commences. And the European and the UK and the early US, because it doesn't wake up again until 9:30, it misses a lot, right? Futures NQ versus ETF QQQ, the main difference is the hours of the day that they're trading. You're not going to see gaps that often in futures. You're just not, because they're trading 23 hours a day. So that gap has to occur either based on extreme news, where we're trading at one level, and because the extreme nature of the news, it jumps through a number of price points. Very rare. So mostly your Friday to Sunday move is your gap. For stocks, it's almost every day because of the length of time they're closed. So keep that in mind. There's a gap, a legit gap up in the NAS. Not a gap up in the NASDAQ because it woke up at 9:30 and finally decided to join the party. It's a legit gap. S&P as well. Right, we closed at one level Friday, down, not as big a gap, but it's really making up for strength. And one of the stronger sectors that I've really been focusing on, Russell, KRE, Zion. We've been watching this one for months now. I definitely want to stick with that narrative, because if KRE, regional banks, as I showed you on that sector list, is near the top of the list, it is at the top of the list. If it's there, then it's going to take Russell with it. And that's where we are. And if this kind of analysis is something you think, gosh, this is missing from my toolbox, this is missing from my game plan, come check out what we're doing in the mastery. And actually, let me even show you. These are the positions that we have as we start the week. I'm going to go ahead and show you here. Okay. Let's see. There we go. Okay. Boom. This is Friday's alert that I send out to members. So something that we do uniquely in the Sector Secrets Mastery is every day after the bell, or right around the bell, is I send out a list of the open swing trades that we have. So swings are typically going to be taken overnight, unlike day trades, which are just today trades. So the swing trades, I'll send out, what do we have open? What have we bought? Every price that we've bought it, every price that we've scaled out. So you'll see, for example, Wells, Alcoa, LNC. I think we're getting pretty close to a T2 on LNC. So you can see we paid $2.40. That is, so if there is more than one entry, it'll be listed here, right? If there's more than one entry price, it'll be listed there. If it's a singular entry price, that's going to be listed there. This is not the lowest number. This is not a cost basis. Every single entry and every single scale out. And that's why everyone really should track their trades. And gang, this is, if you don't want to commit to some sort of software like a TradesViz, which we use also in the mastery to track all of your trades and upload them into software that'll analyze them, give you your average gains, average losses, win rates, hold times, all that stuff. if you don't want to go through that, although this is a great time to do it because I'll oftentimes renew this time of year, benefit from the Black Friday sales. But if you don't want to do that, just open up Notepad. And that's all this is. Open up Notepad and just make a list. Just a line of, just make it one line. Put every single step of the trade there. And this is what I make available to members. We all are on the same page. Right? And hopefully that's something that gives you an idea of what we're doing. I'm long calls, gang. I'm not talking one thing and doing something else. This is what we want to, that's for television, by the way. What we want to do is say, hey, this is what I've got right now. Not this is what I bought in Q1, and I've decided to show up on television to tell you about it in Q3. Yeah, China, anyone? That's exactly what happened, by the way, if you're wondering. Yeah, what was that China narrative all about? That was a bunch of hedgies who bought stuff in Q1 and decided to tell us in Q3, and what do you think happened? Well, I'll let y'all decide for yourselves. So this is what we've got going on. Now, if oil is starting to move, at least crude, now oil stocks, I should say, are starting to move. If nothing else, crude oil is at least somewhat neutral / negative. One of the reasons oil is moving is obviously not related to the strength in crude, somewhat related to the strength in natural gas. There we go. Somewhat related to the strength in natural gas, which has actually been in an uptrend now for a session or so. Natty gas is going to benefit primarily XOP stocks, not ETF, oil and gas explorers, and FCG. So look at those lists. That's where this strength is going to benefit. But nonetheless, and clearly, when we look at the XLE, it doesn't need crude oil at this point. I like to see usually that crude oil is participating with oil stocks. But clearly, whatever the narrative is right now, this is the first week that we might actually organize from bullish momentum into a bullish trend on XLE. And we want to be buying dips, period, when we have at least 3 to 5 green candles of the top tier indicator. That's what we've got since basically the 8th to the 12th of this month. We've got to be buying dips. One of the best places to buy would be Chevron. So that's one I've been talking a lot about. That one's been in a trend for a while. It's an outperformer. It looks even better than the sector it's a part of. So that's where we are there on the energy names. So yes, while I usually like to see, if I'm going to play gold miners, I like to see gold moving higher. If I'm going to play oil stocks, I like to see oil moving higher. Same with natty, whatever it may be. If I'm looking at metals and mining, I want to see copper, silver, gold moving higher. That's ideal, but sometimes it just really doesn't matter. And the oil stocks are going to be benefiting from a narrative apart from an increased price of the underlying commodity. It happens, and it's clearly not a one-time thing. It's continuing now for the better part of the month. So I would say it's relatively legit, reliable, and we want to buy those dips. Okay, next up is let's take a look. There we go. Let's take a look at, there we go, gold. Okay, so that's where, if you take a look at gold, see how weak it's been? I mean, it had a very nice rally through summer and into fall, and it's been just a mess. And that's where, when I see GDX at the bottom of the list, that's where there's ultimately, for me, very little interest to the long side. In fact, I can't even look at the long side. See that there? I can't even look at the long side. Red candles, downtrend. Rog, what do you mean downtrend? Well, it's another indicator that we use in the mastery, and that is, take a peek at the very bottom of this chart, and you'll see 2 rows of colors. And when these both at the top, that's momentum, bottom, that's trend. When these are moving like this, right, that's a downtrend. I'm not even allowed to buy calls in a downtrend, which is why things like GDX and even XLV healthcare have been no touch, right? Not to the long side anyways, because we ultimately don't hate our money, all right? Okay, so that's what's going on with GDX and why I don't want to be guessing at a bottom on something like that. Same thing with XLV. When would be an interesting time potentially to think about the timing of sector rotation for these sectors? If, right? I'm not saying there will be, but if there's a tendency for sector rotation, when would that potentially be? And that's typically going to be the first quarter of the year, where a money manager has the better part then of 12 months to see something in the basement, some subterranean level, right? At least go up a few floors, because that's gain. It's probably in some ways easier to find something at that point that's quote unquote cheap and see it appreciate in value, as opposed to something that's already strong in the penthouse, if you will, and move higher from there. So ultimately, I don't want to be looking at sector rotation, but then as we start to see strength in energy, we'll get there, right? And so energy is just now, see that? It's very neutral. It's just now starting to show that uptrend, but ultimately, there are some that are further along. Another one to keep an eye on would be Williams. All right. Okay, moving on then to, let's go take a look at natural gas. This one can be tough, but a lot of folks say, Rag, if natural gas is moving higher and I'm not a futures trader, how would I trade something like this? You want to check the open interest. You want to make sure that they're moving like NG, but there are two symbols you can look at. BOIL and UNG, right? BOIL. So that's an actual play on the commodity itself, right? That's an actual play on the commodity. And like I said, once you want to go into the oil stocks, that's where you're going to start looking at FCG. And that's where XOP would be the other place to look, those two sectors. And if you've ever thought about, okay, Rag, that sounds interesting, but how do I start to divvy up the sectors to understand, do I play the sector itself? Check the open interest. Sometimes there's a really good play to be had in the ETF, in the sector itself, because there's adequate open interest in that strike that you might be wanting. If not, then we start to look at the stocks heavily weighted within, say, XOP, and there's Chevron. Right? We know Chevron's liquid. Not everything in this list is going to have the kind of open interest that I personally want to trade, but I would say, look at this, look at the chart, wait for the dip, and make sure you have at least 500 to 700 open interest in that group. And then if I'm looking at, say, something like FCG, right? Same idea. What's in the group? What has an uptrend? I don't want DVN or OXY. I don't want FANG. I don't want anything in this group that has recently or currently has red candles is a thanks, but no thanks. There will be other names. Not a lot of trends, interestingly enough. So in some ways, you might say, Rod, why look at UNG and BOIL? Because frankly, in a lot of ways, it looks better than the oil stocks themselves. All right, let's take one more look at the indices before we wrap up. Again, looks like we're going to be opening, in some cases, well above the Friday close, the previous session close, the line in the sand, as I call it. 1% up on the Russell from Friday's close. And let's see, 0.75% up on the Dow, 0.75 point on the S&P, and 0.75 point on the Nas, roughly. So we're seeing a pretty nice amount of strength on the open. And actually the Dow, the S&P, and the Russell are in early stages of uptrends on their 5-minute time frame. So we're going to be getting some strength on the open. All right, gang. So as always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station. Be good to each other, gang.